Okay, so you're ready to step up your tax planning now that you've hit millionaire status.
Well, today we're diving deep into gold IRAs.
Yeah, we've got a ton of research here
Yeah.
that breaks down not only how they work,
hmm
but why they might be a perfect fit for someone like you.
It's funny, isn't it?
Yeah.
Most people think about gold and they think of kyrates,
Right.
buried treasure,
Yeah.
but it's actually a big player in modern finance,
Yeah,
especially when we're thinking about preserving wealth.
exactly. And that's exactly what we're here to explore today.
Yeah.
The source material is really interesting
Uh-huh.
because it highlights the shift in mindset
Okay.
that happens for people once they hit millionaire status.
Yeah.
It becomes less about aggressively growing that wealth
Right.
and more about making sure it lasts.
What's so interesting
Yeah,
is that the focus shifts to preservation,
right.
making sure your wealth continues to work for you,
Absolutely.
even as you head into retirement.
Yeah.
And that's where that strategic tax planning becomes so important.
Okay, so you're probably already familiar with traditional IRAs,
Right.
but a gold IRA offers a really unique twist.
Okay.
Instead of holding those paper assets like your stocks and bonds,
Uh-huh.
you're holding actual physical gold.
Interesting.
So does that actually change things up when we're talking about tax planning?
It does.
Okay.
And with a gold IRA, you can actually potentially defer taxes
Okay.
on the growth of your investment until retirement.
Oh, wow.
So that lets your wealth compound
Uh-huh.
more effectively over time.
Okay.
And then on top of that,
Yeah.
you have that peace of mind
Yeah.
that comes with owning something tangible,
Right.
especially in times when the economy is a little uncertain.
Yeah. And I'm seeing that a lot in the research.
Yeah.
This whole idea of gold being a hedge against inflation,
Right.
it seems like a big thing for people in your position
Right.
is making sure that their savings
Right.
don't lose value over time. Yeah.
The source material goes into how gold has historically held its value,
Okay.
even when, paper currency declines.
Yeah.
Think about the 70s.
Uh-huh.
Inflation was really high in the U.S.
Okay.
But the price of gold actually went up significantly.
Interesting.
So that's why people see it as like a safe haven asset,
Okay.
especially during those turbulent economic times.
But isn't gold considered a volatile asset?
That's a good question.
How does that square with this idea of wealth preservation?
So while gold prices do fluctuate,
Yeah.
the research suggests that over the long term,
Okay.
it can outperform other assets when things are financially uncertain.
Okay.
So it's about balancing that short-term volatility
Uh-huh.
with that long-term stability and potential growth.
So it's not about avoiding risk, it's
Right.
about understanding it.
Exactly.
Okay, so that's the whole idea behind hedging against inflation.
Uh-huh.
Now, the source material also mentions some other key features
Yeah.
of gold IRAs. I'm seeing a lot about tax advantages.
Uh-huh.
So what's the deal there?
Well, the tax benefits are similar to those offered by traditional and Roth IRAs.
Okay.
You can defer taxes on your investment growth until you retire.
Okay.
And if you have a Roth Gold IRA,
Yeah.
those qualified withdrawals could even be tax-free.
That sounds pretty good.
Yeah.
But I know there's a lot of myths out there
Right.
about gold IRAs.
Yeah.
And the research actually goes right at that,
Okay.
debunking a few common myths.
I like it.
So what's the first one we need to bust?
The first one is that gold IRAs are just too risky.
Okay.
And this comes from those price fluctuations we
Right.
were just talking about. But remember,
Yeah.
while there is some volatility,
Yeah.
historically, gold has done well during financial uncertainty.
So it's not necessarily about completely avoiding risk.
Right.
It's about strategically managing it
Absolutely.
as part of a diversified portfolio.
And that's interesting
Okay.
because a lot of investors actually see a gold IRA
Uh-huh.
as a way to reduce risk in their portfolio,
Okay.
not increase it.
Interesting.
It's all about diversifying
Yeah.
and finding those assets that can help you
Right.
when the market takes a downturn.
Okay. What about myth number 2?
Well, myth number 2 is that they're too difficult to set up.
Oh, okay.
And while there is some paperwork involved,
Uh-huh.
a good gold IRA provider can make it a lot simpler.
Yep.
They'll handle the logistics,
Uh-huh.
make sure you're compliant with IRS regulations.
So it's less about doing everything yourself
Right.
and more about finding the right partner
Yeah, finding that trusted partner.
that can handle all that stuff for you.
Exactly.
All right, so that makes sense.
Yeah.
What's the last myth we need to bust?
The last one is that gold IRAs are too expensive.
Okay.
Now, there are fees, just like with any investment,
Right.
but the research stresses that transparency is important
Uh-huh.
and competitive pricing.
Yeah.
So you just have to find a provider
Okay.
that's upfront about those fees and offers rates that are comparable to the industry.
So it's all about doing your research,
Exactly.
comparing different providers before you jump in.
Yeah. Always shop around.
Yeah.
Make sure you're comfortable with the fees
Right.
and the services they're offering.
Absolutely.
Yeah.
Okay, so we've covered all the basics of gold IRAs,
Right.
the what, the why.
Uh-huh.
We even busted some myths.
Yeah.
But I want to kind of broaden our scope a little bit.
Okay.
The source material goes into some other tax-advantaged strategies
Yeah.
that I think could really work well
Uh-huh.
in combination with a gold IRA for someone like you.
You know what?
Yeah.
These next few strategies
Yeah.
could really be game changers for someone in your position.
Okay.
Because
Yeah.
not only do they have the potential to lower your tax burden,
Right.
but they can also help you align your financial decisions
Okay.
with your values.
All right, so where should we start?
Well, talk about charitable giving.
Okay.
Might seem a little surprising to bring this up
Yeah.
when we're talking about tax strategies.
Right.
But it's not just about writing a check
Uh-huh.
at the end of the year.
Okay.
The research highlights some really smart ways
Yeah.
to use charitable giving to your advantage.
Okay, I'm all ears.
Okay.
Tell me more.
One strategy is to use something called a donor-advised fund
Okay.
or a DAF.
Player.
Think of it like a charitable investment account.
Okay.
So you make a donation,
Uh-huh.
you get that tax deduction right away,
Right.
but then you can decide when you want to distribute the funds
Okay.
to the charities you want to support.
So you're being strategic
Exactly.
about your giving.
Exactly. It's planned giving.
Yeah, I like that.
And what's really cool
Yeah.
is that your donations can potentially grow tax-free
Okay.
while they're in that fund.
Interesting.
So it's a way to really increase your impact
Right.
and create a lasting legacy
I like it.
of giving.
Okay, what are some other ways
Yeah.
that we can think about charitable giving from a tax
All right.
perspective?
The source material also talks about charitable trusts.
Okay.
Now, trusts can seem kind of complicated,
Right.
but the idea is that you're moving assets to a trust
Okay.
that will eventually go to a charity you choose.
So it's a way to ensure that your assets are used for good,
Exactly.
even after you're gone.
Even after you're gone.
How does that help me
Yeah.
from a tax standpoint?
Well, that's the cool part.
Okay.
There can be some big tax benefits
Okay.
associated with these charitable trusts,
Uh-huh.
both while you're alive
Right.
and for your heirs.
Okay.
It's a win-win.
Yeah.
You support the charities you believe in,
Right.
and you potentially lower your tax burden.
Okay, so we've got donor-advised funds.
Right.
We've got charitable trusts.
Uh-huh.
Are there any other charitable giving strategies we should mention?
Yeah, the source material also mentions direct donations
Okay.
to qualified charities.
Okay.
This is the simplest way.
Okay.
You just donate cash or assets directly, and then you could deduct a portion of that donation
Right.
on your taxes.
So it seems like with all these different options,
Yeah.
it could be hard to figure out where to start.
You're right. It can be.
Yeah.
It's really important to talk to a financial advisor
Okay.
who really knows about tax planning.
Uh,
They can help you decide which strategy
okay.
really fits with what you want to do
Right.
and your overall financial plan.
It's like anything else you want to talk to an expert.
Exactly.
Okay, so we've covered charitable giving.
Right.
What's the next strategy we should look at?
Okay, let's switch gears.
Okay.
Talk about something called tax loss harvesting.
Okay.
This is a technique where you sell investments that have lost value,
Okay.
and you use that to offset capital gains that
Yeah.
you've made on other investments.
So you're strategically using those losses
Yes,
to lower your overall tax bill.
that's it.
But doesn't that mean
Yeah.
you're selling investments
Yeah.
that are doing badly?
Right.
Isn't that a bad thing?
That's a common concern.
Okay.
But the trick is to reinvest that money
Okay.
into something similar,
Uh-huh.
but not exactly the same.
Okay.
So you're still in the market,
Right.
but you're taking advantage of that opportunity
Okay.
to offset those gains.
So it's not about pulling out of the market altogether.
Right.
It's about making strategic moves
Exactly.
within your portfolio
Yeah.
to reduce your taxes.
That's it. And it can be really helpful
Yeah.
when the market is volatile
Yeah.
because there are more chances to sell at a loss.
Right.
It's about being proactive,
Uh-huh.
making your money work smarter,
Okay.
not harder.
This is starting to feel like we're playing financial chess.
Right.
It sounds like you need to really understand the market
Yeah,
and the tax code
you do.
to make this work.
You're right. It takes careful planning
Uh-huh.
and execution.
Right.
It's best to work with a financial professional who
Okay.
can help you through it.
Okay, so we've got charitable giving.
Right.
We've got tax loss harvesting.
Uh-huh.
What else should someone like you be thinking about
Great.
when it comes to these tax advantage strategies?
Well, for people with a lot of wealth,
Okay.
the research suggests looking into something called a family limited partnership
Okay.
or an FLP.
Now, I've heard of FLPs,
Yeah,
but they always seemed really complicated.
they can be.
Okay.
But basically, an FLP is a legal structure
Okay.
that lets you transfer assets
Uh-huh.
like businesses, real estate investments
Okay.
to your family members,
Okay.
but you still keep control.
So it's about passing on wealth
Exactly.
to the next generation
Right.
in a way that's tax efficient.
You got it.
Okay.
One of the main benefits
Uh-huh.
is that you can transfer ownership slowly over time,
Okay.
which can really cut down on those gift and estate taxes.
That makes sense.
Yeah,
Are there any other advantages to setting up an FLP?
there are. FLPs can also offer some asset protection.
Okay.
They can shield your assets from things like creditors or lawsuits,
Huh.
which is especially important
Uh-huh.
for business owners
Right.
or people with a lot of real estate.
So you're creating a layer of protection
Exactly.
around your assets,
Yeah.
but also planning for the future.
It's a great combination.
Yeah.
But FLPs are complex.
Okay.
You'll want to work with a good attorney
Uh-huh.
to make sure everything is set up right
Right.
and follows all the rules.
So it sounds like FLPs are best for people
Yeah.
who have complicated estate planning needs
Right.
and a significant amount of wealth to manage.
Exactly.
Okay. Is there anything else we need to cover
Yeah.
in this overview?
There's one more strategy that's really important
Okay.
for retirement planning,
Okay.
and that's Roth conversions.
Now, didn't we already talk about Roth IRAs
We
when we were talking about gold IRAs?
Yeah.
So what's the difference?
Roth conversions are a little different. Instead of contributing directly to a Roth IRA,
Uh,
you're moving money from a traditional IRA
okay.
or a 401k to a Roth IRA.
Okay. I'm following.
Yeah.
But why would someone do that?
Right.
What's the benefit of converting?
The main benefit is that with a Roth IRA,
Uh-huh.
when you take money out in retirement,
Mm-hmm.
it's tax-free.
Okay.
You pay taxes when you convert,
Uh-huh.
but all the growth and withdrawals after that
Yeah.
are tax-free.
So if you think you'll be in a higher tax bracket
Exactly.
later in life,
Yeah.
it makes sense to convert now
Right.
while you're in lower bracket,
Uh,
potentially save some money
that's the idea.
down the line.
Yeah, you lock in those tax-free withdrawals
Okay.
for your future self.
That's a pretty compelling argument.
Yeah.
But I imagine there are some downsides too.
There are a couple things to keep in mind.
Okay.
First, when you convert to a Roth,
Uh-huh.
you have to pay taxes on that money
Right.
in the year you convert. So you don't want the conversion
Right.
to bump you into a higher bracket right away.
Right. Exactly.
And the second thing is,
Yeah.
Roth conversions are permanent.
Okay.
Once you do it,
Yeah.
you can't undo it.
So you really need to be sure
Yeah, you need to be confident.
about your long-term financial plan
Right?
and your tax projections
Exactly.
before you make that decision.
Roth conversions can be a powerful tool,
Yeah.
but they're not right for everyone.
Right.
You got to weigh the pros and cons
Yeah.
and talk to your financial advisor
Mm-hmm.
to see if it makes sense for you.
This has been a fascinating look
Yeah.
at some pretty advanced tax strategies.
Right.
We covered charitable giving,
Uh-huh.
tax loss harvesting,
Yeah.
family limited partnerships,
Right.
and even Roth conversions.
I know it's a lot to take in.
That's a lot.
Yeah.
So in the last part of our deep dive,
Okay.
I want to bring it all together
Sounds good.
and talk about how someone like you can actually put these strategies into action.
I like it.
All right, so welcome back.
Mm-hmm.
We've covered a lot of ground in this deep dive.
We have.
You know everything from gold IRAs
Uh-huh.
to charitable giving strategies,
Right.
tax loss harvesting,
Yeah.
family limited partnerships,
Uh-huh.
even Roth conversions.
It's been quite a journey.
It really has.
Yeah.
But I think what's really important for you is
Yeah.
not just understanding each of these strategies,
Right.
but understanding how they all work together.
Yeah, seeing the bigger picture.
Exactly.
That's what we're going to do in this final part.
That's what we're going to do.
Connect all the dots,
Uh-huh.
create a roadmap
Yeah.
to put these strategies into action.
Okay, so if we had to sum up everything we've talked about into
Yeah.
one overarching theme,
Mm-hmm.
what would it be?
I think the biggest takeaway is the power of planning ahead.
Okay.
The sooner you start thinking about your tax planning,
Mm-hmm.
the more choices you have.
Right.
And the more you could potentially benefit.
Okay.
It's about taking control
Yeah,
instead of just reacting
Right.
to whatever happens.
makes sense.
Yeah.
But for someone like you,
Yeah.
who's already so busy managing their wealth, where do you even begin?
The first thing you need to do
Yeah.
is build a team of advisors you trust.
Okay.
Think of it like putting together your financial dream team.
I like it.
You want a financial advisor who gets your goals,
Uh-huh.
a tax attorney
Yeah.
to navigate the tax code,
Right.
and a CPA
Okay.
to handle the accounting.
So it's about having the right people
Exactly.
in your corner.
Yeah, surround yourself with experts.
Okay, so you've got your team.
Right.
What's next?
Once you've got that team,
Yeah.
you can work together
Uh-huh.
to develop a solid financial plan.
Okay.
This plan should cover your short-term goals
Okay.
and your long-term goals.
Yeah.
It's like a roadmap
Right.
that not only helps you lower your taxes,
Yeah.
but also helps you reach your financial goals.
So it's not just about taxes.
Sure.
It's about your whole financial picture.
Exactly. It's a holistic view
I like that.
of your financial life.
Okay, so you've got your team.
Hmm.
You've got your plan.
Yeah.
What else is important?
One thing we've talked about a lot
Yeah.
is diversification.
Right.
We talked about it with gold IRAs,
Uh-huh.
but it's important for your whole financial life.
Okay.
Diversifying your investments,
Yeah.
your income streams,
Mhm.
even your assets
Okay.
can lower your risk
Okay.
and create a more stable financial foundation.
So it's like, don't put all your eggs in one basket,
Exactly.
but applied to your entire financial life.
Right to everything.
Okay, and what else?
Another thing to remember is to stay informed.
Okay.
Tax laws change all the time,
Right.
so it's important to stay up to date.
Yeah.
That's where your advisors come in.
Okay.
They can keep you in the loop
Uh-huh.
about anything that might affect your plan.
So they're like your own personal research team.
Exactly.
Okay, so what would you say is the final piece of this puzzle?
Patience.
Okay.
A lot of the strategies we've talked about,
Yeah.
especially the ones about estate planning
Right.
and long-term wealth preservation,
Yeah.
they take time.
Okay.
It's not about getting rich quick.
Uh-huh.
It's about making smart choices
Right.
that will help you and your family for years to come.
So it's about the long game.
Exactly.
Having that long-term vision.
Yeah.
And sticking to your plan.
Right.
Even when things get tough.
Building wealth and keeping it takes time
Yeah.
and effort,
Uh-huh.
but it's worth it.
Well, I think that's a perfect place to wrap things up.
Yeah.
You know, we've covered so much.
We have
From gold IRAs to charitable giving,
Right.
tax loss harvesting, family limited partnerships, Roth conversions.
a lot of information.
Yeah, but I think we've given you some great tools
Yeah, I hope so.
and some practical advice
Uh-huh.
to take control of your financial future.
Absolutely.
So remember, be proactive.
Yes.
Build a great team of advisors.
Right.
Develop that comprehensive plan.
Mm-hmm.
Diversify your assets and your income.
Yeah.
Stay informed about those tax law changes.
Exactly.
And most importantly, be patient.
Patience is key.
Well, this has been another fantastic deep dive.
Yeah, it has.
Thank you for joining us.
It was my pleasure.
Remember, knowledge is power.
Absolutely.
And the more you know about your finances,
Right.
the better decisions you can make
Yeah.
to secure your financial future.
Couldn't have said it better myself.
Thanks again for joining.